All right. Welcome to the Bottom Line Live. And tonight we have a special guest speaker, Eric Merz. Actually, I just said that wrong, even though we just practiced how to say it. And we are going to talk about how it starts with numbers. He is a business coach, and we met a few months ago, and he was showing me how he does his coaching all about numbers, and I really liked it. It starts with numbers. I 100% agree. And so let him introduce himself as well. Eric.
Thanks, Maya. Thanks for the introduction. I'm gonna share my screen and show this PowerPoint and walk through some things, and then I'm gonna go through some numbers of a business and how different things affect the bottom line. So let me get this screen shared.
And if anybody has any questions, feel free to write it in the chat, and then he will answer or I will answer as soon as we can.
Now, can you see my screen okay? Is it showing full or?
Yeah, I can see it.
Okay. Because all I'm seeing is the presenter view. So
Oh, okay.
But you can see the full screen?
Looks like it.
Okay. So, you know, the old adage, you cannot manage what you do not measure. So numbers are the thing. A little bit of background on myself. I'm Eric Merz, and I'm a business coach in California. And I've been doing this for about 17 years. I live here with my wife, Kayleen, and we have 4 children that are grown and a couple of grandchildren on the other coast. And I focus on numbers as a business coach because I know that the numbers are going to lead me to behaviors that are either happening or not happening. And so I've learned over the years in my own businesses, you know, to track certain things in my business and how that ends up going to the bottom line. Learning about leading indicators, lagging indicators. I'll probably talk about that a little bit further. But recently I came to this place where I thought, I'm bored with Eric Merz Consulting. That's the name of my company. And I said, what is it I really do? I want to brand something different. And so I started playing with words with a marketing consultant that I work with. And we came up with the words in Latin that veritas, which means truth, and tua, which means you. And so your truth, veritas tua, or tua veritas. And we kind of played with those words, and we came up with this word Vertua. So hence Vertua business coaching, because what I figured out what I did was I help people find their truth. It's not about my truth or somebody else's truth. It's the people I work with. It's what's their truth. Where do they want to go with their company? Why do they want to go there? What do they want to do with it? And so numbers comes into playing the truth is very important. Everybody keeps score when they play a sport or a game or whatever. And even if they say, we're not keeping score, I guarantee you they're still keeping score, right? That's just the nature of how we are. Somebody's winning, somebody's losing. I'm winning, I'm losing. I'm doing better, I'm not doing better. So that's really what this is all about. Quick little story. A colleague of mine told me this story, and I've tried this out myself, this concept. But he was working with this logistics company, and he didn't know what he was going to do to help them. He was a consultant, and they said, we're just not getting things done the way they need to be done. We're lagging behind on our orders, and can you go down to the warehouse and figure out what's going on? So he went over there, and he just went and asked somebody a question, like what are you doing, and how many loads are you loading per hour, and some things like that. And he says, well, how long does it take you to do a load, and how long? And these guys were working the warehouse, taking these pallets and putting them in these vans, and then the trucks would move them, and then another truck shows up. Well, they were getting backed up, and if you think about it, they weren't really thinking about what they were doing. They were just they were working hard. Everybody came to work every day and worked hard, but they weren't really doing the results that needed to be happening. The company had more volume available to move through their organization. They could make more money, but they couldn't get it through there. So he went down there and he asked them this question. Can you see this all right?
Yeah, perfect.
Okay. So anyway, he asked him the question, and so he kind of watched him for a while. He observed for a while. And then he asked the guy, he says, can you keep track, how many of these pallets you load in an hour and how many trucks you do in a day? So the guy says, sure, fine. So they had a board there and he just started keeping track. So he came back about 3 days later and check in on him, says, how's it going? He goes, oh man, we're doing so much better. He says, we were only doing 20 loads a day and now we're up to 30. He says, oh, really? He said, because he didn't really tell him, to improve. He just ask them what they were doing and how much they were doing. Well, they started keeping track. And so they started talking among themselves, if we move those pallets over here to the other side of the shed, and if we, could get that forklift all the time instead of part-time, and we went and talked to this other guy and they switched some equipment around so we could have the forklift all day, they improved their productivity by over 50%. And so it was one of those things where it's an aha moment. It's like, oh, they measured it. And he didn't tell them to do anything. They just did it because they wanted to do better. He said, look how much better we're doing. And, they were all excited. Of course, the boss was really elated. So that's kind of like what happens.
No, it's so true. And people don't really realize that in order to make informed decisions, you need numbers. And so, and that's why I like your whole philosophy.
So going forward, where does this end up on the bottom line? Because every business has to have profits to stay in business. So, we keep a profit and loss statement that keeps track of, it's really looking backwards, what's already transpired, what's happened. We might have a forward-looking budget and match it against our profit and loss to see how we did, another scoreboard, if you will. We also need to look at cash flow. We need to know we're going to have enough cash to make our payroll, to take care of paying our vendors, to pay the rent, whatever our obligations are. So we need cash flow statements. So those come from our projected profit and loss and the balance sheet, which is the third thing, which is really a snapshot of where we are today. It tells us how many assets we have and how many liabilities we have. And there's a lot of component parts to that. So sometimes when people say, I just don't know what my profit and loss, well, I want to know their balance sheet and their cash flow statements too, because really this all goes hand in hand together. The profit and loss is, it's like looking at a movie going backwards. The cash flow statement's more like, looking into the future, if you will. And the balance statement is just a picture of right now. This is where we're at.
Yeah. Eric, I realized what you were asking. We can actually see your current slide and the small picture of the next slide. I don't mind, but just in case, because I think you were asking.
I don't know how to switch it around.
No worries.
Okay.
We'll work with it.
That's all right. Some people like to move ahead of the person speaking, so it'll fill their need. Exactly. So anyway, going on to the profit and loss, we need to look at different things when we look at profit and loss statement. Financial scorecards, such as looking at lagging indicators versus leading indicators. Profit and loss is a lagging indicator. It's telling us what happened. We want to know what our income was. We don't want to know what the cost of goods. What is the cost to produce, the service or the product? Gross profit comes from that cost of goods being subtracted from the income. So now we have our gross profit. Then we have our expenses that are fixed, rent, insurance, things like that. And that gives us our net profit. So moving forward, is this too small on the screen to be able to see this?
I think it's good. It works.
Okay. So, so you have your revenue, and here's just a snapshot of a 3-year. And I always like to have my clients look at trends. So the only way to do that is to look at different periods. So it might be looking at quarter versus quarter, might be looking at month over month from year before, or the whole last year versus this year and 2 years ago. And so the benefit of that is to see what the trend is. You know, are our revenues going up? Are our cost of goods going up or down? And according to the revenue, if they're going up faster than the revenue as a percentage, and that's another aspect, is we want to figure out what our gross profit percentage is. And you can see here on year one, we have 40%, then we have year two, 44, and then 41. So it's kind of fluctuated in there. So then we want to drill down what caused gross profit to be higher one year than another or lower than another year.
Mm-hmm.
And then you have your fixed cost, and those can vary sometimes too, based on, you know, our rental agreements, our insurance quotes, different aspects of capital that we may have to attain to, you know, capital assets that we may have outlay for. So those things can vary, or we hire more staff that's permanent. When I look at cost of goods, I usually include labor that's required to produce the widget or the service.
Mm-hmm.
And I also look at, so if coaching somebody, I'll try to get them to separate that from the overhead of the office or things that are going to be more fixed, regardless of how much workload we have.
Yeah, I agree. That's
then
how
we
I
get to our
understand
net
it.
income after that, after we've subtracted our fixed cost out of our gross profit margin. But, you know, first of all, I usually find money in the fixed cost because it's easy, because a lot of times there's subscriptions that are there they haven't been using for years, things that they've been paying for. You know, we'll go in there real quick and do an audit and find those opportunities in there. And I'll show you a little bit more detail later on the spreadsheet. And then the cost of goods sometimes is a little more challenging, because now we're talking usually about labor and the cost of buying goods that we're going to use as inputs, or things like, for some services, it might be gasoline and diesel, and it might be things like materials necessary to do the jobs, or building materials for a builder, right? So that would be in their cost of goods. So when they're figuring out what they're going to charge somebody to build something, they need to know what that is. Plus, they need to know what their fixed costs are for running the business, so they can, you know, put their bid in that's going to cover all those costs. So if they were doing like 10 projects a year and they have a fixed cost of 500,000, they know they need to break even. They need to make $50,000 on every job at gross profit, or else they're going to be in the hole.
Mm-hmm.
You know, we'll look at things like that. Cash flow statements, we look at cash receipts, cash dispersed, bank balance, accounts payable, accounts receivable. So we're projecting, you know, based on the payables that we have coming and the receivables that we have coming, based on our bank balance, you know, where's our cash going to be 30 days, 60 days, 90 days out. Farther that you can go, the better off you can plan. You may need to make adjustments. The sooner you make adjustments, the less draconian those adjustments have to be. So a lot of people aren't aware of something until it bit them already, right? So that's another reason why these statements are very valuable for a business to be looking at.
Agreed.
So here's a balance sheet example. They have 6,000 cash, 12,500 in equipment. They may have accumulated depreciation off of that equipment. Maybe this is their net amount of equipment after years of depreciation. That would probably be an item that would be on the balance sheet already as a separate line item. Then over on the other side, we have the liabilities. We have their accounts payable, their wages payable, and then we have their capital accounts, and then their total liabilities and owner's equity. So that should equal the assets, those two things combined. So a lot of times I'll prepare these statements for people just trying to figure out what the value of their company is at the point in time. I you know, often refer them back to their accountant or bookkeepers to help with some of that. But the reason I make them do it is because if I'm working with them to grow their company to see, okay, if it's worth this much today, what can we make it by making it more profitable by even small increments? And in 5 years, if they want to sell their company, what do they think they're going to get for their company? And then take out the factor that they're doing half the work as far as managing it, and they're going to have to hire a manager. So a lot of times their company is not worth very much. These balance sheets, though, usually are the hard assets, so that you don't have the intangibles like, oh, we have a customer base that's worth this much. And that's where you get into the profitability of the company times a multiplier. A lot of businesses sell for 3 to 5 times, their net profit margin. And that's usually after depreciation, less EBITDA, which is earnings before interest, taxes, and depreciation, are taken out of that factor.
Right.
So for taxes, you're going to take all those things, but when you go value your company, you're not going to use those things when you want to multiply it. And that's the typical practice for businesses being transferred. So balance sheet it's like, oh, this is how we are today. And, then what I do is compare like last year at the same time. So right now I'm looking at December 31 balance sheets versus the year before. Did we gain, at least on the book value where we're at? We may be more valuable because we have more customers or some other factors. We've got new technology in place that nobody else has. Those are intangibles that are really, you got to really sell those when you go to the marketplace. So you got to really have that nailed down. But I start with the numbers, and then it's going to be at least that much. So you need to create a scorecard in a business, create a compelling scorecard. It needs to be simple and easy to read and use, visible. It must be easily visible to the team. It needs to be two-dimensional. It must show the leading as well as the lagging indicators. Leading are things like, our number of hours it takes to do a certain job or produce something. So those won't necessarily show up on a P&L. A lot of leading indicators will just be numbers that you keep. Like in my business, my other business, I keep track of how many hours or how many acres we produce per hour per machine. So because I charge by the acre, that can tell me what my gross number will be per hour for every employee worked. And I put that back to now, if my payroll goes up because California raised the minimum wage and now I've got to raise all my wages, what impact is that going to have on my bottom line? So then how I know how much I need to raise my price to stay even. That's why you need to have some of these leading indicators in place so you can quickly get to some decision making concerning pricing and bidding out jobs and things like that. Plus, it gives you something for your team, just as the example I gave with the logistics company, your team something to get their teeth into to really help drive profitability.
Yeah. I read a book that talked a lot about the lead measures and lag measures, and I can't remember what it was called, but I liked how it had, gross income, for instance, would be a lag measure because it's showing you, it's basically, you don't find out what your income is until you've done all of the, sub items that you have to do in order to get income. So
Right.
you get to see what your driving statistics are, like what can you track?
How many invoices? Yeah. How many invoices did you generate? What was the average invoice number? You can drive that up. So some of my clients, that's what we focus on, is trying to get a bigger ticket item. How do you get a bigger ticket item? Well, we cross-sell, we upsell, we learn all these strategies, but we have numbers that we're seeing whether or not we're doing better. In hockey, it's shots on goal, or soccer, shots on goal. They measure that because they know after so many shots at that level, the percentage is you're going to score so many goals. Or if it's the other way around, it's like if you're allowing them to have that many shots on goal, your defense isn't very good. You're not keeping away from the goal. That's the other side of the coin. So that's where leading indicators come in, and they feed the ultimate result, which is the profitability of the company.
Yeah.
You don't just wake up one day and we made this. Well, I just hope it works out. They're going to live on
Right.
hoping. So, here's another example, number of appointments per week. So for a salesperson, like, they're going to be, that's what they're tracking. That's why, they have the dreaded, sales meeting where they have to report their numbers. And, good salesmen, they hate to do all this stuff and keep track of this stuff. They're probably doing all this stuff, but they're not good at tracking it. Well, that's why the manager wants to see something that he can set. Well, the only ones he really needs to worry about, if they're not really performing, we can go back to the numbers, but the people that actually start doing the numbers, they're the ones that end up excelling. The ones that don't, they don't. So that's pretty much how that goes. Another way is to track. Here's the actual numbers: number of first meetings, number of sales, first meeting percentage, conversion. So keeping track of these things, we can see, are we getting better at something, or are we getting worse? Or, has the market changed? Is our product or service not relevant as it was? We start asking other questions because we have numbers in front of us. Absolutely. If we don't have the numbers in front of us, I don't know what's going on. Well, we need to find out. Now, here's just another representation of how you might do that. Number, you can see here, I have posts and emails on the bottom here, and how many calls you made and how many visits you made. So those are just leading indicators to how many sales you're going to get. You see, sales isn't really on this list. Sales are really lagging indicators.
Right.
This is just another, example of an organization I've been involved in. And they've got all these salespeople here, and all their data's there.
Mm-hmm.
I'm not going to get into all these details, but so in my company, as I give an example, we typically have 30% labor costs. So if I go do a job, it's going to take me 30% labor of the cost of the revenue. Like if we charge $100, it takes $30 to produce that. So I watch that. If it goes up to 32, then I'm looking at overtime. I'm looking at all kinds of things to see, why is it over 30%? Now, when it hits 28%, I'm like, good job, attaboy, and let's see, why did it work better this time? And try to duplicate it in the next season. A lot of that's farm work, so it's seasonal. Timely delivery of service is another thing. Are we on time? How about how much downtime? Are we keeping track of that? Are we doing our maintenance? That goes back to, then we can say, is our maintenance program good, or is it revamped? Scheduling, calculated daily. So if you have managers, supervisors, and if you're the one, then you're watching these things can improve. It's just like the scoreboard. You're watching it, so you're going to perform accordingly. So just, there's my contact information. That learn.virtuacoaching.com is a learning website. You can go on there, and there's several videos on there that for free. And if you want to subscribe, there's something there, but there's a lot of information there on the front that's free, or virtuacoaching.com. There's my phone number.
Thank you so much. I love that. And I love that, I talk about, for businesses, I talk about how important it is to know your numbers all the time. I just talked to a company today that literally had no idea how much money they were making. And he just said, I just send my CPA, I send them my expenses and stuff, and we do our taxes. So I'm like, well, at least you're doing your taxes. But I personally don't think you can manage a company without knowing these numbers. So I think it's great that you're coaching business owners with this in mind, that's the first thing they're going to be doing is you're going to find out their numbers. You need the bookkeeping, because I harp on that. I talk about that over and over again. Questions for you: if you had to pick, what's the most important thing for a business owner to keep track of? Like, let's say they're not tracking anything. What's the most important thing? Where should they start?
So do they have any books at all?
Let's say they don't.
they just have a checkbook.
Yeah.
So-
Let's say there's some of these smaller contracting types, they've got, not much going for them
So I would
as
take
far as bookkeeping.
yeah, I would take so they probably have a bank account. I
Mhm.
would take their bank statements for 3 months and I would add it all up, all the expenses. And then I would take and I'd take all the deposits and I'd start there. It's like at least how much money we took in and how much over a 3-month period. Because some things will lag because you billed somebody that didn't pay you yet. Now that's a cash thing, right? So
Mhm.
you could actually literally build a P&L from a bank statement.
Yeah.
If they're going to pay their credit card off through there, of course, they're not going to have it coded and do, all that stuff properly, but they'll know what they spent that money on. So those were projects. So there's the cost of goods. And I paid the payroll company that I paid them a check. So there's your payroll. You can start categorizing and put it on even a piece of paper this big.
Yeah.
With just some simple things. Here's labor, materials. Here's my what my shop and office costs down here, the rent and insurance, and keep it simple. But now let's see, is there a margin in here?
Mhm.
And then I'd send them to a site to go see, based on their classification code, what percentage should they be spending on gross, what should be their gross margin. They can, all those industry standards are there, and let's see if they're below or above. And if they're below where they should be, well, then let's go a little bit deeper and find out more of the details of that area. So I don't know if that helps, somebody
Yeah.
start out, but
I know, I think that's great because I think, that my what I'm always saying is get a profit and loss statement, get a profit and loss statement. That's not just my opinion, that seems to be, you agree that that's the first thing they need, even if they just take 3 months, even if they're not doing it in QuickBooks, just at least get a profit and loss so you can start seeing what you're doing.
because otherwise they're just looking at their bank account and then going, well, we've got money in there, or we don't have money in there, or we have all these bills over here, but but at some point they need to engage in putting that in a system, even if it's going to be paper, but it needs to be somewhere where you start tracking it. But how do you know what to charge? How do you know, if you're spending too much in one area or not? And things creep on you when you don't, especially in this last year, with inflation. It's been brutal on some industries. I mean, my farmer customers, their fertilizer went up 300%.
Wow.
Because of oil and things like that. But I heard it went down again a little bit, but it's still like twice as much as it was 2 years ago.
Yeah. Yeah. No, you're right. You have to keep track of your cost of goods and everything to make sure that you're staying profitable. And if you need to raise your prices and how much you can afford to pay in salaries.
Or how much of that you should use. So sometimes you could cut out some waste, like, okay, can we get by with less? Can we plan our trips better so we don't buy as much fuel?
Mhm.
But if you're not keeping track, you don't even know where to start looking at the behaviors.
Such a good point. You heard it here first, folks. If you're not keeping track, then you don't know what to even do next. Okay, so we're gonna wrap up in a minute, but Eric, do you want to put your contact info back up in case anyone wants to get a hold of you? He does business coaching, and because he's telling everyone to get their numbers together, I think I'm going to highly recommend him because I'm 100% on the same page. And he's getting his contact info up. If you guys need any help on bookkeeping, because, based on what Eric is saying, everybody needs bookkeeping, you can definitely reach out to me. You can comment on the Facebook page. You can message me, Facebook, LinkedIn, Instagram, Maya Weinreb, or Solvency Now Bookkeeping, as well as you can email me at maya@solvencynow.com. And here is Eric's contact info. His website is learn.virtuacoaching.com/sim, SIM.
Now, that's actually a simulator where you can actually, if if you know some things about your business, you can put your numbers in there and actually it will walk you through opportunities to grow your business. But learn.virtuacoaching.com is an academy site where I have over 240 videos on there. And then virtuacoaching.com is just my regular website. So that's more information about me.
And we've got his phone number here too. So if you guys want to reach out to him, at eric@virtuacoaching.com. So if anybody needs any business coaching, feel free to reach out. He'll definitely help you. If you need any bookkeeping, he'll probably send you to me first anyways. Maya@solvencynow.com, or you can go to my website, solvencynow.com, or send a smoke signal if you need help. January is the biggest month of the year for bookkeeping. We've got all the W-2s, the 1099s. We've got everything due by the end of the month. So keep that in mind. If you don't have that going, reach out to us now if you need any help, because we're about to not have time. We need, if anybody needs help on 1099s or payroll, we need all the information by the 15th of January at the very, very latest. Okay, good. And we're going to wrap up. I'll see you guys again next week, same time, 7 p.m. Eastern on the Bottom Line Live. And thank you all for coming.
Thank you.
All right. Bye-bye.
Bye.